Guys, it's TWT here today, and we're going to be doing another video. It's a bit of a late one today, actually. It's around 10 o'clock UK time. So I'm just going to be breaking down one of the trades that I had taken today on the Friday of the 31st of January. So it's literally the very end of January. And this is what I like to call a perfect algorithmic trade, okay? So before we even get into the technicals, the lipstick of what I put onto the charts and everything that you see right now, we're going to look at this from a higher time frame firstly, right? So we're going to go straight into the daily chart. And if you actually zoom out here, you're going to see quite a lot of shit's going on, right? You know, you can see we're in a huge area on the charts here. Okay, so where's this come from? We're going to go straight into the weekly chart, right? And you're going to understand where a lot of this information has come from, okay? So let's have a look at the weekly chart, right? First things first, on the weekly, you can see that price hit this higher time frame week price area, okay? So why did I mark out this specific area? Well, let's zoom out a little bit further, right? We have a whole load of shit going on here, right? We've got the low that was made down here back in 2017, all right? When I tell you this shit is algorithmic, when I tell you that everything is coded for a reason for you to take these trades, I literally mean it, right? Because when you look at this law, it respected the law here, respected the law here, respected the law here, because you can literally see here that same law, price came down into this law, ripped back up, came back down into this law, ripped back up, and it's gonna do it again, okay? So it doesn't have to be spot on, but you can kind of see that same pattern forming week in and week out for years, okay? So you know this strategy has been working for years, okay? Now, before we get into anything, let's now go into the daily chart, right? And I make every single of my trades have high conviction trades, okay? What does that mean? Why does it have to be high conviction? And what does this mean necessarily, right? So, what is going on this side of the chart, on this part of the chart here? Well, you can see that price made this low, right? In fact, we can make this a bit easier, right? Price made this exact low. It came up, it came down, it came back up, it came up, it went down again, and it hit this low. You can see it hit that low, and then it began to run up, right? And if we draw a line out here, you can literally see that it's gonna match. Oh shit! It's gonna match. And this makes a bit straighter. Yeah. So you can see here, right? Price made a few of these little ups and downs. Made a higher high here. Price came down. Made a low. Made a higher low here. Sorry, a lower high. Sorry. Price then runs up, liquidates. Price now comes down, and you can see here, right? This looked bearish at first. Price then came up. Looks like it's going to be a retracement, right? It's literally looking like it's going to do a retracement from this part. It's going to come down here and it's going to rip lower. However, price then comes up, liquidates this high. You know, you can see here if we were to make a little line here, liquidates this high, runs lower, takes support of this high, right? It takes support of this high and begins to rip higher. And so that exact sort of ideology, what we like to call a bullish breaker, bearish breaker, okay? This was a bullish breaker where we see this exact formation occur where price has come into this region, it's hit this high, come down, hit the high, ran up higher, okay? It's come down, yeah, as you can see, it's come down, right? And you can literally see this perfect formation because this area here is just a huge sort of mitigation, right? It's an area where price is taking action, where price has come down, made a low. As it's come back up, price has seeked and come into this fair value gap, ripped higher. And again, there will be another bit of mitigation here and here, okay? And you can see it. It's pretty crystal clear, right? Where price has met a high, come into this region, ripped lower. Prices come into this region, and ripped higher. Okay, and so these are key areas, right? So now that we have that in mind, we can literally just get rid of this, to be honest. Now that you have these key areas, because these are the areas where price is making a move. This is where price is doing something, right? So now we know this. We can see here that price is now moving downwards, right? And so we can take action. We see that price is running lower. So what are we going to do here? What are we planning to think? We're going to think, well, price is going to continuously run lower. However, you can see that there's lows dedicated down here. There's lows down here. And what is resting at the bottom of these lows, okay? What is resting here, right? Let me just make sure a cleaner line here. What is resting below these lows? And I know a lot of this is going to make no sense at all. If you guys are following an ICT sort of strategy, we know that down here there is liquidity, okay? And that is very important, because if price plans to run lower, it's going to seek this liquidity and it's going to begin to run higher. And I'm very happy to say that we've liquidated those lows. Now we could potentially run lower. This could be a sort of a higher time frame retrace where price plans to come up higher, run lower, liquidate everything here. And bear in mind, we're looking quite far back. We're looking at 2023 lows here, right? So if price does plan to come down this point, it's going to liquidate quite a lot of the liquidity that's resting down here. And we're just going to see if we get this ghost projection here, price could potentially, let's see, grab this bit of liquidity, run higher, take out all of this, potentially even run higher, take out buy side liquidity, run low, go below this retracement, go below the whole line that we took out and we showed you from 2017 to hit this line and take a massive run up higher. That is the prediction that I've got that's going to be going forward with high conviction for the following months. And this could probably even go on to 2026. Okay, and just to show you what kind of value we're looking at, that's nearly 2,000 pips. And that, with some decent lot size, you're looking at a lot of money, okay? But we don't like to look at lots or pips or whatever because that's not really important. But these are high conviction players, okay? Now, and we're going to go back into delving into this specific trade that I had taken, okay? Now, by this point, right, actually, before we get into anything, let's point out what we're seeing on this chart, right? Well, the first thing I'm pointing out straight away is the highs and lows that my eyes are darting towards, okay? The high and low of here and here, right? That's the low, that's the high. Pretty simple. This is the specific region that I'm going to be pointing out, the high and the low. Pretty straightforward, right? What's going to be resting on top of that? Well, sell side, buy side. Done, okay? Cool. Now, by this point, I don't really look at the daily chart that much, other than the fact that I can see that there's a fair value gap resting here, fair value gap resting here, and that's about it, okay? Most of my trades, most of my conviction, most of my ideology comes from the 1 hour chart, okay? These are the main time frames I like to look at, okay? So you can see down here, a lot of liquidity is resting down here where we see the wicks. Remember, the bodies tell the story, the wicks do the damage. The wicks have a lot of liquidity resting down here, okay? What do we see here? Well, there is a resting fair value gap that's tapped into this we can see prices tapped into this fair value gap, sort of juggled around, sort of rested in this region, came up, ripped lower. Price came up, ripped lower. Price came up, ripped lower. Price came up, ripped lower, okay? And now that we've actually, and this is how I know personally, when we are stopping this algorithmic sort of ideology of this rip up, rip lower, is when we make a displacement. What did we make? We made a displacement above this region, and now we're going into this next set of area of price, okay? We made a new set of area of price. That means we're targeting new areas of liquidity. So now we no longer need to look at this region as much. This time span from the 7th of January or the 8th of January down to the 23rd of January, we no longer need to keep specifically focused on that region. So now let's have a look at this now. We've come up into this region. What are we seeing? Where is my eyes darting towards? Rested liquidity, okay? rested liquidity, okay? Now, before we can make any judgment, before we can say anything, what do we have on the left? We have rested liquidity and an imbalance, okay? Now, I've marked out these two key areas of price because I want to see what price was doing when it reacted to a specific region such as this sort of order block and this fair value gap. Price came up into this order block, it ripped lower. Price came into the fair value gap, it ripped lower. Okay, so these are key regions, right, where now we can say, well, price is bullish, but the overall time frames are bearish. So we're looking for bearish trades. We're not looking for anything bullish unless it's high conviction. Because on the hourly, on the daily right now, we are bullish. However, on the higher time frames, such as the weekly, we're bullish. But in smaller time frames, we're seeing bearish movement. So it's quite difficult to decipher exactly what we're looking for, okay? So now, you need to now not get over-consumed by the sort of lower time frame ideology. Why? Because if you get overly consumed in what you're looking at, if you get, and this is a term that I see a lot in the sort of trading world, is you don't want to be sort of overly analyzing the information that's given to you. You want to sort of look at it from hindsight and respect the information that's given to you, make mental notes of what's given, but don't act on everything. Now, this is a key quote that I read from a book from The Art of Execution, where I believe it was a reference from Peter Lynch, who says, the art of investing is to execute. However, now this is my take on it, is a trade is nothing until you've executed, but until you have the right convictions. And you can see, like, we don't have to look at the weekly chart. We don't have to look at the daily chart. We don't even have to look at the hourly chart per se. However, I personally do, and I like to see where areas and where price is reacting towards, because that is where I can make these conviction plays. Okay, now before I even get into the trade I even took, we've spent so much time doing higher time frame analysis, and this is the time and the energy you need to put into when you take your trades. However, otherwise, if you don't, you're going to lose out so much value from the information that's being given to you. Okay, now we know that there's a reaction within this region. Okay, we know that there's a region here that price is reacting towards. We know that. Okay, so what is given to us now is that we have this fair value gap that's given to us. Price wicked into this fair value gap, it began to tread lower. Price then wicked back up into this fair value gap, it began to rip lower. So now we know this fair value gap is reactive. And we know that on a higher time frames, right, is that when price was previously going into these regions, it was ripping lower. So either way, we're going to be somewhat quite bearish. However, when price is coming into a higher time frame region, such as these lows here, then we can start to see that for price to go higher, for it to even react to a fair value gap that is given to us here, it needs to be bullish, realistically, right? And so I keep saying bearish and bullish. However, I'm talking about now a bullish trade. So how can I make this assumption? Well, we can go back to this again, right? We can go back to this region, right? So let's say we make some random little plays here. What's going on? This is really bad, actually. let's do that again. Okay. So you can see here, right? When price comes up here, it's taken out this high, which means we've liquidated that region and we're running lower. However, for the price to actually come up and take out this high, it needs to take out some liquidity from somewhere. And so where do we see here there's rested liquidity? Well, you can say there's rested liquidity here, where we've took out liquidity here, and that's probably why we made this trade that high here. But what else did we take out? We took out all of this liquidity. we took out that liquidity. And that's the reason why we were able to accumulate longs to take out this high. So now we can look at it from this exact time frame, right? This is just a slightly less sort of a cleaner view of what's going on. This is the exact same thing. Just imagine, oh shit. Just imagine this is the fair value gap, right? And so we were anticipating this position, right? We were anticipating price to run up higher into that fair value gap, right? That's where the target is. And we've just seen the move that price has come down and taken out this low. And whenever price needs to come down to take out a low, it's going to target a fair value gap, which means we can take a long. Even though price previously was bearish, we know that for price to continue to be bearish, it needs to take out liquidity. Okay? So now, where did I get the confluence or the confidence even to know that price is now going to make a high? Well, there was a bunch of things I saw. The first thing is I saw that price came down to this region, took out these laws. We took out these laws at a time frame. The exact time we took out this law was at 9:30. That is as algorithmic as possible, okay? Now, we had news at 9:45, so I tend to wait till after news to take a trade. But that wasn't the only thing. If we pop into the 5-minute chart here, we came out, this was the liquidity line. This is the line that I drew off from down there. This is the same exact line. Price came down, wicked it, and we didn't make an imbalance. We didn't make a candle where we can then say, well, okay, we've made a candle most likely, and when I mean a candle like an imbalance, I mean like a full thick candle. We made a liquid wick, which means price isn't planning to run any lower. It's willing to liquidate and run higher. And that was enough confluence for me to think, well, price is most likely going to be in this region now. So then I start looking towards taking a long, okay? And so the first thing is I'm not going to instantly take a trade here. I'm waiting to see if price is willing to make a change in structure. And what do we see here? Well, I drew a line here and we see the change of structure here. Very faintly, price made a body of the candle above this region. And that's when I started to take positions. I took a position, I went to the 1-minute chart. As soon as we go into this 1-minute chart here, right? As soon as we go into this 1-minute chart, price came up, made this imbalance, I entered straight away. Price starts to dance around now. Obviously, I move my stop, so we're going to move it back down to where it was. And I was watching the chart move from this region, up, down, up, down, up, down. And by this point, I've seen that price has come down. I'm like, shoot, okay, we're getting towards my stop loss. Do I close the trade? What stopped me from not closing out this trade, what stopped me, the mentality that told me to keep going long and continuously, is because I've seen that this is a high conviction trade. This is literally mechanical. I've done this exact trade hundreds of times before. I've seen price dance around. Even if price was to come here and completely liquidate my position, I'm fine witnessing that move up. Okay, why? Because at the end of the day, I knew I was right. It means that it didn't happen today, but this exact same trade, this mechanical trade, it can happen again. Okay, which means I just need to be more cautious next time. Okay. Now, what I could have done, and this is something I want to do for the future, is I plan to accumulate more longs. Why? Because I noticed something here. This diagonal line represents something very important. Is we already seen this change of structure. We already knew that price was planning to run higher, so we were already anticipating to see this rip higher anyways. We were anticipating it to run higher anyways. When price came to begin to start going lower, I then thought, well, let's look at the Dixie. What is the Dixie doing right now? If you don't know what the Dixie, this is the dollar currency, right? So I went to check out the Dixie, see what the Dixie was doing. The Dixie made a high and broke that high, meaning price went above the previous high, That didn't happen in GU. GU did not do that exact same thing. In fact, we respected that law. Now, to get things not as confusing, the Dixie is just the inverse of this exact model. So you can see that it's flipped upside down. So you can see that this high would be this low. But what we see here is we disrespected it. We went higher, which means that price is now going to make a reversal. Whenever there's a disrespect like this on a completely different currency, it's going to make this conviction even higher. In fact, we're more anticipated to see that price will run the opposite direction. And so by this point, I was very confident that price was planning to run lower. What else kept me convinced that this was going to run lower? I drew out this bullish order block, right? This is the green block here. And I drew a block here. Price came down, tapped into this box. Tapped into it. You cannot make this up. It tapped into it. As soon as it did, it ripped. As soon as it did. It made a fair value gap, didn't even bother to tap into that fair value gap. Made another fair value gap, tapped into it, made a small body candle wick here, and it began to rip higher. Made another fair value gap here, and by this point, I was confident it was going to rip higher because it made a 3 candle wick fair value gap. Perfect fair value gap. Ripped higher, right? And by this point, I was confident. I was watching it run higher. By the time it hit this area, now, why am I targeting this region specifically as a target? Because this is the start of the London close. This is the exact high for the 9 a.m. I use time in a lot of my confluences. This move happened at 9:30. This move happened at exactly 10 o'clock. There's a reason why things happen at exact time frames, because everything is algorithmic. So when you've learned that algorithm, you will learn that everything is happening for a reason. This is not in hindsight. I took this trade live during the time frame it happened. Okay, I took this exact trade, and if you guys are willing to follow my TikTok, my shorts, I'm going to post a video of me recording my phone showing the exact prices that I took these exact trades at. Okay, so this is not hindsight. This is legitimate trades that I took. Notice how price went to this fair value gap, decided to dip lower, wicked in, dipped lower, but then we made an imbalance and we began to rip higher. That's when price started to explode higher into this target, and then I begin to scale out of my position, having my eye darted at the highs up here. What did price do? It came low, took this bullish breaker, tapped into it to run even higher, came into this region. What else do I have my eyes on? The fair value gap. What did price do? If we go back into the 5 minute, price came into that fair value gap, hit it perfectly. Let's go into the 15. It's a bit clean actually. Came into that fair value gap, ripped even higher, and imbalanced it out. Okay, imbalanced it, right? However, we didn't imbalance it. We wicked into it, because if you go into the hourly chart now, you can see that is a wick, and it didn't make a full wick balance, which means price then capitulated again, which means now I'm going to do some market analysis for next week. And if you guys are interested in me doing some market analysis, you want to see what my predictions and what I think price is going to go towards next week, the week after, etc., then you guys are just going to have to keep watching my YouTube videos. I'm going to be continuously doing these kind of videos going forward again. But yeah, this was the exact trade that I took, and this made me approximately, I think, around £22,000, or I don't know, like $26,000. So if you guys want to do these exact kind of trades, then you're going to have to watch my videos in the description, and check out my channel, guys. I'm an upcoming YouTuber, so please give me some love and support. Please like the video, and peace.